Good evening, everyone, and welcome to our first Sustainability Dialogue session on future of ESG investing in Asia, building strategic partnerships between investors and businesses. My name is Prachi Seth, and I lead the climate action platform at AVPN. I will be your MC for today, and I am delighted to have you join us. For those of you who do not know about AVPN, we are a network of funders and resource providers with over 600 members across 32 markets. Our mandate is to move more capital towards impact in Asia by providing social investors like yourself opportunities to connect, learn, and lead. Please do stay with us till the end of the session as we will be taking questions from the audience. To kickstart our sustainability series, I would like to invite Naina Sabharwal Batra, who is our chairperson and CEO, to say a few words. Naina, over to you.
Thank you, Prachi. It is a pleasure to join you. Dear members, partners, and friends, I'm excited to welcome you to the launch of AVPN's first ESG-focused sustainability dialogues. I'm really excited to report that we have more than 400 people who registered for this session. And I believe that we are going to see them join in rapid succession. This is a very, very important session for us because it is a testament to the growing momentum across the ESG and the sustainability landscape that we found a need to create a space such as this. With unprecedented levels of investor interest and enabling policy regulations, ESG investing and reporting have reached new heights. And whether you are a seasoned practitioner or a new entrant in this field, I believe that we are all here today to learn how ESG can not only be better integrated into our social and environmental performance, but also be used as a meaningful framework in deciding how we allocate resources or develop our portfolio. We at AVPN wanted to launch this series because we empathize with the frustrations of implementing ESG reporting, particularly given the heterogeneous nature of Asia's markets and economies. While there is great interest in ESG, this movement will not thrive without an infrastructure around it to create benchmarks and catalyze innovation. So our team at the AVPN Climate Action Platform released the Sustainability Dialogues to do a few things. First, debunk misconceptions, then find coherence within a relatively fragmented and nascent landscape, and finally, chart a roadmap to achieve meaningful outcomes. And we do this by connecting you with leading practitioners, sharing practical guidance within the context of the current crisis and beyond, and surfacing high-impact investment opportunities for you to consider in your decision-making. So, even after this event, please continue to stay updated with us to participate in future workshops and roundtables that promise to be practitioner-oriented like this one. Finally, I am thrilled that we are kickstarting the dialogues with a highly esteemed all-women power panel. Even in the sustainability sector, it is rare to bring together women from mainstream capital markets. Although today we learned in breaking news that Sumitomo Mitsui Banking Corporation has just announced that Ghislaine Nadeau is their first Asia-Pacific head of ESG. So AVPN also today has brought together 4 amazing speakers who just happen to be women. And I would like to introduce them. We have Victoria Tan, Head of Group Risk Management and Sustainability Unit of the Ayala Corporation. Harry Cho, the Managing Director and Head of Sustainability and Sustainability Finance at SGX. Deborah Ho, the Country Head Singapore and Head of Southeast Asia from BlackRock. And last but not the least, I would like to give the mic to Vivian To. Vivian is the Partner and Head of Asset Management and ESG at Dentons. And Vivian is also a member of the Board of Advisors of AVPN. Over to you, Vivian. Vivian, I don't think your camera is on yet. So could I request all the panelists to unmute and have their cameras on, please? There we go.
Yes, thank you. Technical issue there, but this time technology doesn't enabled us to gather here. So very, very happy to be in this conversation. And what I'll do in the next 5 minutes is to set the tone for our conversation today. And thank you, Naina, for the introduction just now. And thank you, ABPN, for launching this very important dialogue on sustainability and the future of ESG investing in Asia. So I'm a partner and head of asset management ESG here at Denton's Hong Kong. And I'm also part of Denton's ESG Global Steering Group. ESG and sustainable finance, compared to quite a number of years ago, today is certainly at the top of agenda and in front of people's minds everywhere. And so I think we hear of ESG moving into mainstream. But I guess immediate voices of urgency are around climate, especially as governments, including the US now under Biden administration, have made strong net zero commitments to align with the Paris Agreement, with strong policy drive and efforts in the lead up to COP26 this year. It's really hard to keep up with the pace of change, even as professionals, because new laws and regulations relevant to ESG and sustainable finance are actually rolling out at rapid pace, especially with a lot coming out of the EU. Many of us in the field will be aware of the EU taxonomy, which is intended to define what counts as sustainable for directing investments and projects under the European Green Deal. And in March this year, the Sustainable Finance Disclosure Regulation came into effect, applying to financial market participants in the EU, their products and investment activities, with some impact for investments in Asia. More broadly, the European Commission recently proposed a Corporate Sustainability Reporting Directive that appears to further extend sustainability reporting standards and requirements. So I'm just setting this kind of overall framework for our conversation. Today, however, we will focus on Asia and look at how sustainability and ESG is evolving in our region. ABPN has been a champion and catalyst in driving capital towards impact. It's really great to have today's lineup of distinguished speakers who represent leading examples in our market. SGX as a market infrastructure provider, BlackRock as a leading asset management company and the largest global investment manager, and Ayala Corporation, which is the oldest and largest conglomerate in the Philippines. We really have representations of views from very senior and multiple perspectives. As a general point, I would say it's fair to that for a number of years, civil societies, nonprofits have been lobbying on climate and other social issues. However, asset owners and institutional investors actually have been setting expectations and standards ahead of regulations. And certainly we have seen this already driving change in some key areas, which we hope to cover today. Concerns with climate risks and carbon goals are actually very quickly driving policy and regulations. While there has been a key concern around greenwashing, therefore, there are the importance of taxonomies and the more regulations on disclosures and reporting, which we will cover today. Perhaps in Asia, in comparison to EU, the effects have been more gradual, but we'll discuss some of that today. Overall, I think we can say that there is a global shift that is quickly accelerating. And before I turn to the panel, I'll just quickly share about China, because China has been leading and developing green finance following the Paris Agreement, and there have been strong efforts to develop a green financial system. And Paris Agreement applies to Hong Kong through China, and Hong Kong has been having a big push on climate and green finance in recent years. And back to corporates, Hong Kong is one of the first stock exchanges to require listed companies to report on ESG. And the ESG reporting guide, the most enhanced version updated in December 2019, now requires mandatory reporting in relation to the board of directors oversight and engagement on ESG matters, and also elevated comply or explain disclosures on 4 environmental aspects and 8 social aspects. So that's where things are in Hong Kong. And I think we will soon see the first set of these reports by 31st November this year that reflects the new ESG requirements. And data is very, very important for investors to invest with an ESG lens. So with that, if I may now turn to Harry, following my sharing in Hong Kong, to tell us more about Singapore's initiatives and SGX perspectives on its role as a market infrastructure in the ESG ecosystem.
Thanks, Vivian. Now, I think it's worth just highlighting that market infrastructure, it's a somewhat strange place to be because you're at the heart of the whole ecosystem, the whole capital markets flows through you, but at the same time, you have to balance the different perspectives of the different players, you know, whether that be the companies that are listed on the exchange, the commodities players who are hedging the flow of commodities that they procure, or investors who are investing through the equity or fixed income, etc. Now, so with all of that in mind, there are a few key things that a market infrastructure like ourselves must heed when looking at sustainability and sustainable finance. Number one, it is clear that all actors are on this journey with particular focus on climate, as this set of seminars present today as well. And there are certain facilitation that we must play while safeguarding. So there are certain things that market infrastructure must future-proof, but also allow capturing of opportunities. On the future-proofing part, the sort of the harder stick, I suppose, to use might be on the regulatory side. Now, more to help future-proof the listcos themselves and to get the right information that's needed for the investors to be able to make the right decisions around ESG and sustainability. SGX already implemented mandatory sustainability reporting back in 2016. So it's been approximately 5 years since the initial announcement for it to be mandatory. There are key few factors that are important parts of that. For example, materiality and the need for board of directors to state within the reporting, what role do they play? Now, it's interesting to see the evolution of the uprising of the standards of the sustainability reporting over time. We just released today a report that was produced together with the NUS, the National University of Singapore, that analyzed 566 listcos to see how they're doing in terms of their sustainability reporting. And we can see marked improvements since 2019, when we did the same study based around about 450 companies, with continuous increase in material disclosure, increase in setting of targets, and increase in disclosure around environmental factors as well. Now, Vivian, you touched upon the broader topic of taxonomy too. So just for the audience, taxonomies is a language that have really been picking up recently, that are meant to channel capital flows towards either greener projects or companies, or more specifically in the context of Paris Agreement, towards stronger climate mitigation and financing of the projects around that. There has been development at Singapore level by MAS. There was a consultation paper that was out. I had the fortunate opportunity to be an active member of that consultation paper creation. And then there are efforts at the ASEAN level, which are just at the cusp of starting on how to come up with a language that allows capital to flow better to greener projects over time, whilst not forgetting that there are other environmental contributions that companies and investors must continue making. So decarbonization and climate change mitigation is a very important factor. We all agree on that. But how do we take into account biodiversity? How do we ensure that this doesn't compete for land for food production? How do we ensure that there's social safeguarding? And over time, how do we ensure that there is even impact created on the social side? So SDGs, the Sustainable Development Goals, are quite integral to taxonomies, as well as Paris Agreement itself, actually, that say that other factors are as important when we look at decarbonization over time. So it's worth noting that just like in Hong Kong, here we're about to launch a consultation on fortifying climate-related financial disclosures. But also worth noting that we are still founding vice chair of TCFD since the beginning in 2017. So we'll look to support companies, support investors in what is needed to future-proof and allow companies to capture opportunities over time.
Thank you, Harry. It's great to hear about that initiatives that you mentioned to provide guidance to companies. If I may turn now to Deborah to share with us in this context, how is BlackRock approaching sustainable investing in Asia, especially as a global group with commitments from the top, as we hear from Larry Fink often as a legendary figure on this. And also, how do you find regulatory requirements in the EU filter down to how, or perhaps shape your investing approaches in Asia or ASEAN?
Sure. Thank you, Vivian. The work, that people like Harry does, at the SGX is, certainly really important to people like us. Because as investors, we're going to need, the best quality data. We're looking for robust governance in order for us, to truly be able to carry out, sustainability investing. But maybe I'll take a step back and talk a little bit about how we approach it. So at BlackRock, we have this, deeply held investment conviction that we have to integrate sustainability, because when we do that, it helps investors achieve better long-term risk-adjusted returns and also to build portfolios that are more resilient. Okay, so that's why last year we announced that sustainability is our new standard of investing. So we also believe that we're now at a cusp of a tectonic shift of investor flows and preferences towards sustainability, because there is a significant reallocation, of capital. And so our sustainability strategy is centered around creating long-term value for our clients. And there are basically two structural socio-economic themes that drive our sustainability strategy. The first one is climate change, basically the climate transition to net zero. And the second, stakeholder capitalism. So for the first factor that I mentioned, we know that climate risk is investment risk. And we also believe that climate transition also represents quite a historic investment opportunity. And so commitments to net zero by governments, investors, companies are going to fundamentally reshape, the global economy. And so all this brings both risks as well as opportunities. So there's no company or business model that won't be profoundly, affected by this transition to a net zero economy. And the second thing I wanted to mention is stakeholder capitalism, right? And so this is centered around, ensuring that the transition is just and equitable for all. And that's the concept of stakeholder capitalism. So it's something that, as you mentioned, Vivian, Larry has been talking about for quite a few years in his letters. And we see it as a force for long-term resilience and profitability. So, you've heard it before. The pandemic has accelerated many of these pre-existing social and economic trends that make stakeholder capitalism really important. And so, being able to connect to your stakeholders, establishing trust and acting with purpose, it lets a company understand and respond to some of these changes that are happening in the world. So last year we saw that across industries, companies with better ESG profiles were more resilient to some of these shocks and uncertainty, than the peers with lower ESG scores. So companies are recognizing that their prospects for growth very, very connected to their ability to operate sustainably and serve its full set of stakeholders. So when you put these two themes together, that's why we say that we're on the cusp of this shift on a reallocation of capital. And in 2020, we saw that investors put almost $300 billion in sustainable products, which is a 96% increase for the whole of 2019. So, again, right, I mean, this shift towards these sustainable assets enabled by a range of factors. I mean, the data did improve. I mean, there's more to go, but certainly an improvement. There are more sustainable investment options. There's also a growing consensus, about sustainability as a driver of returns. And 81% of sustainable indices also outperform their benchmarks. So net, although investment returns will fluctuate over time, but we saw that in 2020, this was more obvious. So I know I have very little time left, so maybe what I can do is, I can just round it off there and let you carry on with the rest of the conversation.
Thank you, Deborah. It's really great to hear that we are away from the misconception in the past that ESG investing involves a trade-off on return, and that is consistent with this idea that it actually pursue better long-term investment return, and also that companies are also seeing the importance of sustainability in Asia as well. There are kind of things that we'll want to cover in terms of how you are seeing this across Asia or in different parts of the region and the different companies. But I think this is a good point to invite Victoria to share her perspectives as a corporate to see how these dynamics have actually impacted your group and how you find compliance reporting requirements changing perhaps as a result of investors' expectations, even if it's not a matter of your home market regulatory requirement. And just kind of let us learn about your perspective as a company.
Okay, thank you for that, Vivian, and good afternoon to all. I think as what Naina mentioned a while ago, there has been a significant increase in the interest for ESG disclosures globally, both because of the rising demand from investors, just like BlackRock. We have received at least twice in a row a letter from Larry Fink about climate change, our adoption for TCFD, and our adoption of SASB in that regard. And of course, we are taking that very seriously. And we know that societies as a whole are becoming more aware of the environmental, social, and governance impact of businesses. The Philippines is not immune to this, and we are glad that our very own SEC made that regulations that ultimately pave the way for the listed companies to make that disclosure. And that regulations came out in 2019. Our reporting business units only adjusted minimally because we were already reporting on these items beforehand, in fact, a decade earlier. As part of our sustainability philosophy and our commitment to accountability and transparency, we annually report on our ESG performance. We do not see this more as a compliance, but instead, it is a platform for us to connect with our stakeholders and present to them our positive and negative impact. That's really a balanced reporting. Our aspirations, our collaborative efforts with different groups and communities. However, the challenge actually rests on the alignment with myriads of frameworks while ensuring that we produce a very comprehensive report. We are a very diversified conglomerate, and the need of our businesses are different. We are in various industry sectors, but since 2016, we already adopted the IR reporting framework as a communication tool. That's how we discuss the different capitals and how we use them. What are the strategies that we employ? What is the outcome and the output of those strategies? And how do we want to move forward? Our financial performance is based on the IFRS, while our non-financial performance, we are using this GRI and the SASB frameworks. Now, SASB does not have a specific metrics or materiality indicators for a conglomerate as big as Ayala. But what we did is we enjoined our business units to adapt SASB, look into that, and see how we can map this and roll it up to the parent company level. So even if SASB does not have a specific industry or indicators for a conglomerate, we were able to do it. Aside from that, we are looking at TCFD because I think TCFD is more of an outside-in framework. We have to look into the impact of climate change into our businesses. So we adopted that in 2019. We made a commitment that we will use that and we will continue to complete our disclosures on the 11 requirements. But what is very exciting about this TCFD is the strategy pillar, wherein we have to understand what is the impact of climate change to our businesses. So our SEC, just similar to Hong Kong, they also have this comply or explain option until 2021. I think this one gives time to adjust for companies to do this properly, right? Because it will require resources. But in 2022, it will be mandatory. And then for us who are already reporting and we are actually using the 4 recommended frameworks of SEC, this is just not really a very minimal adjustment, but we are continuously adding companies to our portfolio, so we have to enjoin them and be part of the reporting process. So as a recipient of those regulatory requirements, I think we welcome that because it will actually provide a level of playing field for everyone to disclose their material issues. And that will actually help the country as a whole. And over to you, Vivian.
Thank you. Thank you, Victoria. I think that's very comprehensive. And you mentioned a number of reporting standards, or in particular, TCFD and SASB. And I think, those are really key in terms of disclosure and reporting. As you know, I think without data, it's really difficult to assess and measure and determine what is the outcome for ESG. And there are a lot of frameworks as well. So another one that I'm familiar with would be, and also picking up with what Deborah said earlier about the stakeholders' interests and purpose of capital or purpose of a company is actually like benefit corporation, which is a new legal form in a number of states in the US, and also B Corps as a global movement. So these are together different frameworks and reporting that are in the market. And so I guess I would like to now turn to a discussion involving everyone. Is this question of alignment and harmonization is the first topic for us to cover. I just kind of wonder, is there a shared concern on the need for alignment, or do we feel that actually it's good that we have these different frameworks to have available data, and that there would necessarily be some different adoptions or different, it might cater to different markets? Would like to get the views, maybe starting with taxonomy, if I can turn to Harry, first of all. In terms of taxonomy, also, I think there are a number of different frameworks, such as what I mentioned on EU taxonomy and China. And then I think in Singapore and ASEAN, there are also different taxonomies. Perhaps Harry can share your perspectives on this and the question of alignment.
Yeah, so before we talk about alignment within the taxonomies must also align with the disclosure standards that's up and coming. Now, fortunately, in the disclosure world, all of those beautiful standards that were already mentioned have come together, right? Yeah. And, 2 key initiatives, one is driven by IFRS Foundation, as many of you may know. And the initial focus is, again, at least trying to find alignment of the various standards in climate-related disclosure. Something should be out before the end of this year. And IOSCO, which is a confederation of standard setters and regulators, they are completely backing the movement there too. So, worth noting that within the EU taxonomy and the EU regulations around sustainable finance, the newly launched sustainable finance disclosure, the sustainability, corporate sustainability reporting directive, that also specifically points to the fact that the standards for disclosure themselves have to also align with the definitions in EU taxonomy. So what we're going to see is, first of all, if we're going to talk about climate-related aspects, let's talk about that, because I think that's the key focus around disclosure and taxonomies today. The North Star, by first and foremost, is Paris Agreement. The science behind it all is something that is the backbone to it all. And that's where the reports, the science reports like by IPCC, the mention of the carbon mitigation hierarchies that come up on the GHG protocol, the order in which companies should be taking actions, starting with avoidance and reduction within its operations and value chain, all of this still has to hold. And the taxonomies that define, and depending on the taxonomy, it looks at it at project level, some look at it potentially at the company level, at the entity level. So all of these factors do have to support each other as well. So there's clearly some more work to be done there. And whether it's the regulator or the company that's trying to swim across this, the soup of ABC soup of sustainability, or an investor that's trying to navigate through what do they need to, what are they obliged to report on, and what kind of information do they need, everyone at this stage must have their antennas out and keep a very close eye on the developments. But taxonomies themselves are indeed converging to the extent possible. Vivian, you mentioned that different parts of the world have different needs. That's absolutely true. And developing nations have different factors as well. But the good thing is, for example, the EU taxonomy is already in conversation under the initiative called Common Ground Taxonomy, as Vivian mentioned, with the Chinese parties. And within that working group, and that's under EU's International Platform for Sustainable Finance, there are another 20 or so other regulators who are part of that conversation. So there is this clear drive towards a commonality. The ASEAN initiative was looking at exactly the same thing. It does not make sense for 10, 11 nations to come up with their own taxonomy. So the key is continue to drive alignment within the taxonomies, but also to every other touch point that this links to.
Thank you very much, Harry. Yes, I think there's important work streams there among the governments, such as the Common Ground Taxonomy as part of the International Platform on Sustainable Finance, that EU and China, and I think many countries are part of, and this is going to be critically important. So that's going to be a highlight this year. Thanks for sharing those perspectives, Harry. I guess that should be good news, perhaps for Deborah and Victoria in your work as well, when looking at investing, because I can imagine that it would be challenging if there are different taxonomies, perhaps that you need to deal with in the EU and in Asia, that could be disconnect when you invest in Asia. So perhaps I can invite Deborah to kind of share your perspective.
It's I think that it's not just taxonomies, but we also have to talk about reporting and reporting standards, right? Okay, and so the stance at BlackRock is that we are for global alignment and harmonization of these reporting standards. Okay, because the proliferation of so many reporting frameworks has been a pain point, for reporters as well as investors. And many of these disclosure initiatives, they kind of have overlaps. And so that leads to duplication of efforts, lack of consistency, comparable data, and that kind of thing, right? So the harmonization of these frameworks is pretty important, because if not, companies like, Ayala, you're going to have disclosure fatigue, I guess. and this obviously is non-productive. So we strongly advocate actually for the convergence of different reporting frameworks to be able to establish a globally, recognized approach to sustainability reporting. So I guess, you have a combination of the best ideas lah. So we continue to advocate for SASB, TCFD, until a global standard is established, because we believe that sustainability disclosures are in companies as well as investors' own interests. And so we're asking companies to move quickly rather than wait for regulators to start imposing them.
Yeah, I think on that note, I will pick that up. I agree that we are also waiting for that harmonized version for sustainability reporting. But as of now, what we are doing is we are mapping what is available in GRI and what is available in SASB. And if these are part of our material topics, then we pick them up and we use them as our indicator and our metric. We have to agree also that the ESG aspect, the E is the most mature aspect, right? There's a lot of science-based protocols there, like the GHG accounting protocol. Everyone cannot go wrong using the GHG accounting protocol in accounting and defining your scope 1, scope 2, and scope 3. And I think on that note, we can all develop a science-based target. And I think for that alone is a good improvement or a big improvement in the way we are reporting, just understanding the GHG protocol. Yes, I'm waiting for that harmonized version and looking forward to that. I am hearing that Harry said that it may be there's another reporting framework by the end of the year as developed by the Big Four, and hopefully that will really help our life easier in the reporting side.
Yeah, thanks, Victoria. I think to pick up on what you said and also what Harry said about science-based targets and the focus around climate, I have a follow-up question, Victoria, because I think Ayala is a large corporation. You have different businesses and segments. So I'm curious to maybe for the audience benefit as well to hear whether you can share anything in terms of the different businesses and segments as you apply the standards. And also I want to take this opportunity to break it down a little because we've been talking about climate, and as you said as well, environmental measurements and frameworks are more mature. But I think, with COVID, and unfortunately, I think in a week that we all realize that COVID is not going away soon, and COVID has kind of resulted in more attention actually on social issues. So if you can share as well with respect to your different businesses segments in how you're responding with respect to COVID and highlighting on the social part of ESG for your organization.
Okay, I think we all agree that climate change is an existential threat. And even if there is COVID right now, we still have to make sure that we have a strategy to mitigate or to adapt or to innovate around these climate change issues. But the COVID pandemic is actually highlighted the inequality between the rich and the poor, right? The social, it snowballed from a health crisis to a social crisis to an economic crisis, probably to another issue in relation to geography, as we can see right now, that some countries are coping well while others are not. In the Philippines, when this COVID pandemic hit us, the first thing that our principal did is to make sure that we take care of our employees. So we, like a plug and play kind of thing, everyone will be working from home. We did our own self-assessment, whether we can go back to the office just in case the government actually lifted this lockdown, which until now is still on a lockdown. I think we have the longest lockdown in the world. And then aside from that, our principals also make sure that we are financially provided for. So there is a salary continuance for us, and also for those employees of our third-party service provider who are mostly on a no work, no pay basis. After we have made sure that our employees and our third-party service provider employees are taken care of and they are in the pink of health. So we also have some health programs. We have mental health programs. You can see people doing the online physical activities as you can see them doing that, or cooking lessons online, everything, just to make sure that we are engaged and that we are taking care of ourselves. Then one of our principals, our current CEO right now, actually called the other conglomerates and to 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 make sure that the vulnerables are also protected, because we are the employees, and around us these are the people who are really on a no work no pay basis. So they set up a fund, the conglomerates. We set up a fund, we call it Project Ugnayan, and for that we actually were able to provide relief for at least 3 million families, equivalent to 14 million people, while the government is still preparing its assistance program for these vulnerable communities. So aside from the employees, we take care of our community, the vulnerable, and we also make sure that we have some help for the SMEs. We have to agree that the SMEs are significantly impacted by this COVID pandemic. They lost their businesses, and in the Philippines, 63% of the SMEs are actually employing a lot of the people. They are the employers in the Philippines, these SMEs. So we really need to help them. And we made a survey. The 3 items are important for the SMEs. They need access to healthcare. So we have our AC Health develop a program for them. They need access to financial services. So our bank actually had this COVID care bond launch, and also it will trickle down to the SMEs. And then our telco company provided an affordable Wi-Fi connection for them so that they can continue the businesses while this pandemic is going on. So this pandemic has actually highlighted the vulnerabilities of the different businesses, and more likely the inequality in terms of gender, in terms of income generation capability. Hopefully we can resolve this sooner than later.
Yes, yeah. Victoria, I think thank you very much for sharing that practical aspects. And Deborah, I'll turn to you in a minute, because I want to highlight that from what Victoria said, there's actually a lot of need for collaboration, as you described, with the other conglomerates, as you mentioned, and in terms of dealing with the unexpected COVID situation. And I think it is in situations like that, in the time of change, that you find that it's important to find partnerships, which brings us nicely to the kind of the next topic we wanted to cover, which is on partnerships between investors and businesses. So I wanted to turn to you, Deborah, to ask for your perspectives with respect to, how BlackRock has seen or observed about companies dealing with social issues and ESG, as part of ESG and your ESG investing over the past year, and also as part of stewardship and engagement.
So maybe I can also carry on from what Victoria was talking about, because I think that what she's been describing is literally the social license to operate. And I think that this particular point, first came about actually not during this pandemic, but during the last GFC. Okay, so if you recall, those were the times when, the man in the street, felt that, he or she was, unduly penalized, for issues that occurred in the banking sector, right? And so there was all this talk about how it's important to build trust, and financial systems on the around the world are literally based on trust. And so I think that the discussions in terms of the permission to operate in a country by doing right by the people basically came into play during that time. During the pandemic, I mean, all these pre-existing conditions that we talked about, whether it was income inequalities, or balkanization, I think, or even digitization, right? I mean, all this basically, came to a head. And so what it now means is that companies can no longer just satisfy their shareholders, which is what all of us were taught when we were in business school, right? But they really have to make sure that they serve their customers, their employees, the societies in which they operate. Because if not, they will not be allowed, to do business, or to operate successfully, wherever they choose to operate. So I think that's really key. And if you ask me, that's probably something good that's come out, of the pandemic. Although I would say that we're still in it. The other thing I wanted to mention, really, which is what Victoria is talking about as well, is this private-public partnership. Okay, because sometimes governments are not able to mobilize as quickly, as efficiently, actually, as as private companies. And therefore, there are certain issues around the world that you need to be fast. Okay, I mean, and so in that respect, seeing that companies now, are taking their social responsibility, to partner with the government to be able to help society, is a huge thing. Is a huge, I would say, thing going forward. In that regard. And the other thing is also to talk about solving some of the sustainability issues around the world. So you may have heard that BlackRock recently partnered Temasek to launch decarbonization partners, which basically is the whole goal is to target late stage VC and growth PE decarbonization solutions, because we all believe that the transition to net zero is inevitable. So again, I guess people coming together, not doing it on their own, but partnering.
Thank you, Deborah. Very, very well made points. I actually want to also highlight on that this is a very important aspect of ESG is the social license to operate and the company's social performance. But at the same time, I think I thought it might be interesting to also mention that the role of corporate philanthropy is still here to stay. And actually, this is also a question from the audience in terms of how nonprofits can have a role to play. So I think it's a good point to mention that there could also be partnerships between corporates and the nonprofit sector. And on this, actually, in the Hong Kong Exchange ESG reporting guide, actually, one of the social aspects to report on is actually on the community engagement, such as to understand the needs of communities where the issuer operates and the activities that it takes to take into account communities' interests. I think this is side by side with the company's own social performance, which is ESG as in its business and operations. I think that is one key shift in terms of how we look at corporate social responsibility to bring it into the company's business operations. And so thank you, Deborah, for those points, and so that we can also answer the question from the audience as well on this. And I think it also is good for us to ask this question that we talk about when we had our conversation before this, is the role of the Sustainable Development Goals. And I think that's something that is possibly an overall framework for driving sustainability. So if I may turn to the panel again to see if you have any thoughts to share about SDG and using SDG in your work. Thank you.
I will take that, Vivian. So I think in 2018, we launched our Ayala Sustainability Blueprint. And as in the evolution of our sustainability, we started off just like everyone else. It's a philanthropic cause. Like we want to donate, we give money, but we know that the impact is not that big. Then we move to corporate social responsibility, but really seeing more of community engagement, right? But we move to the CSB framework that is creating shared value. That means we are looking at societal gaps, what are the issues, and within our capability and resources, we develop a innovative business model, we have to bring that up to scale. Remember that part of sustainability is financial viability. Otherwise, it will not be a sustainable solution. So it should always have that financial portion. So when we have that in 2009 as espoused by my chairman, Jaime Augusto Subel de Ayala, then we said that the 17 SDG goals, these are a good business agenda. We can look at the societal problems that we can contribute that are naturally aligned with our business units and then contribute to that goal. What we started in 2016, we said, oh, it's easy. We can contribute to the 17 goals. But we realized that that is not the goal of the SDGs. The 17 goals, there are 169 targets. And for us to truly say that we are committing to these 17 goals, we have to use the targets set by the UN. So there are goals for the government because we need the enabling environment. They can incentivize us or disincentivize us, but we have to make sure that the government is part of it. And then for the corporate, we make sure that these goals are aligned and that those are the goals that we are also tracking in our sustainability blueprint. So in the end, we deliberately and purposefully said that we will be contributing to the 11 SDG that are naturally aligned with our businesses because we think that we can move the needle in that particular space. We can give significant impact. We can develop that impact and innovative and inclusive solutions. And going back to the public-private partnership that Deborah said a while ago, and one of the principles that we use in developing the blueprint is that we cannot do this alone. We need the public-private partnership. We can have partnership with the NGOs, with civic society, with the academia to make sure that we will be able to bring the Filipinos to a global Filipino citizen by 2030. So it's a dream that we have, and for us, SDG is a way for us to create value to our stakeholders, specifically those communities that are marginalized. So there are 3 journeys there. We want to take the Filipinos from marginalization to access and inclusivity journey, from untapped potential to productivity and competitiveness journey, from irresponsible growth, we see plastic, we have this GHG emission, to responsible growth and innovation journey. So innovation is also a key in this sustainability blueprint and in the achievement of the SDGs. And of course, financing is the muscle for it all. Thank you.
Thank you. That's very, very comprehensive, Victoria. And any quick thoughts on that, Harry and Deborah? Maybe in terms of maybe SDGs and what you expect of corporate, because we have to turn to some audience questions in a couple of minutes.
So just really quickly, I mean, SDGs were a brilliant language that united the world in talking about sustainable development. Now what you're going to find is there's going to be more and more definitions and better measurement around what it really means to contribute, to make contribution and impact towards an SDG. And that would depend on whether you're a real economy company or whether you're an investor or financier who are indirectly supporting it. So, watch this space. It's going to be all linked to, for example, taxonomy development and impact work, which is, what AVPN does. It's going to be very important that we tighten the units of measurement around it.
Thank you, Harry. Deborah, do you have any insights? I'm sure you have plenty, deciding which one.
Well, no, anyway, I actually was, I'm probably going to echo a little bit of what Harry said, because if we take a step back, right, you recognize that the SDGs were originally designed not particularly for investors, but mostly for governments and policymakers, right? So from the perspective of an investment manager, the SDGs are not necessarily the best metrics of financial materiality by themselves, because materiality is what we're concerned with, right? So SDGs become meaningful and impactful to us when it is paired with a clear investment framework, okay, that links SDGs to a clear investment case. So, I mean, I'll just give you an example. We have a niche investment strategy that explicitly advances the SDGs, and we use the materiality, additionality and measurability framework when analyzing companies on their SDG performance. So materiality, it means that more than 50% of the company's revenue has to come from the SDG aligned activity. And additionality means that the company has to fulfill an unmet need. And the last bit, measurability, is that there has to be clear KPIs for each of the investment cases that is clearly linked to the SDGs. So, the framework serves us well as investors to limit greenwashing. But as Harry said, I think that, as things progressed, you will see a lot more, I would say, details and elaboration on this.
Thank you. Yes, I think it's all very positive, because I think from the sharing today, we know that ESG investing is already here in Asia and is quickly moving forward. And also, despite clear policy agenda on climate, we are also embracing the social aspects of it, and the ideas of just transition in the transition pathways, and the decarbonization efforts having to reflect social issues as well, are themes that we've touched on. And it's good news to hear that SGX is also taking into account the social aspects as well. I think we have a question here. Do we have a framework which includes ESG and carbon neutrality goals in the same reporting structure? I think you touch on some of what's been discussed here, which is the goal. That sounds like the goal that we're all working towards, but perhaps it's still work in progress, if I'm correct in summarizing based on what we've discussed earlier.
I just want to highlight one more time that on the Paris Agreement itself and on the science-based targets, so they've also recently released the science-based targets are more for corporations, Paris Agreement is more for countries, right? And the official actors. Now, both mention very clearly that decarbonization and the drive towards net zero should not be at the expense. At the very minimum, there is clear direction towards not doing harm to other environmental objectives, such as biodiversity, or from social perspective, just transition. I know that sometimes can be a bit of a loaded word, but ensuring that the community also benefits from decarbonization activities. So that's clearly mentioned in both the SBTI's guidance as well as the Paris Agreement. Now, is there need for this to be better articulated and actions to, standards to really help guide this further? Yes, but there needs to be clarity, that understanding that those are not either or, they're actually integral to each other.
Thank you, Harry. Yes. Deborah, I don't know whether you have any specific thoughts on that, but I just want to say that, certainly the different frameworks and a lot of the reporting around climate has to be science-based, and we talk about different frameworks. So I think there's a question here about, whether BlackRock considers if TCFD or SASB is a more appropriate measure. But I would also add that, this is moving very, very quickly. I know that there are sort of work streams among accounting reporting standards on reporting, and also there are more expectations on auditors as well around climate reporting from companies to be TCFD or to be Paris aligned. So this is moving very, very quickly. So I just want to make sure we cover that as well, that this is not static and it's actually really a journey for all concerns to get or move to a decarbonized economy.
Okay.
Yeah. Deborah, do you have any thoughts on that, or I think we have 1 minute for any final thoughts as well. If you want to grab that before we turn back to Prachi.
So just to address your question, We have been advocating for companies to disclose, in line with TCFD and SASB. And again, right, I mean, it's because these frameworks let companies report on sector-specific financially material ESG issues. Okay, I think I keep talking about materiality, because I think as an investment manager, that's what we're focused on now. So we help them find, we find these frameworks actually quite helpful because they are not overly prescriptive. They give companies a template to think about, and to manage material sustainability risks and opportunities that are specific and material to their own sector.
Thank you, Deborah. Yeah, this is really moving very, very quickly. And it's like the key is financial maturity from an investment perspective. And I think there's also a lot that the market is evolving around financial reporting based on climate aligned metrics. So this is what I guess, we're all on the same page that this is important, but that this is happening, and we are moving forward with social considerations in mind as well. So I think we are 1 minute over, but I really think that we have covered a lot on this panel. Thank you very much for all your sharing and your perspectives, and which really informed this discussion. And I hope that we will have more of such conversations as we continue to develop this. And as Naina said at the start, we're a panel of all ladies, so gender and diversity is also one topic, but we're not able to cover that. But I think that's something that we will be able to continue to work on as an ecosystem. So with that, actually, I turn back to Prachi. And thank you very much, everyone. And thank you to all who tuned in.
Thank you.
A big thank you to all our speakers today, Victoria, Harry, Deborah, and Vivian, for such an engaging session. Please do continue to engage with us on our other sessions that would come up next month and in 2 weeks' time. The details are on the screen, so please do join us for a continued discussion on such an important topic.